Okay, we're going to talk about understanding your income statement that your CPA gives you. This is one of those basic financial statements that every business owner really should know, but it's amazing how few do. I mean, I'm using QuickBooks here, but an income statement is an income statement, and it really doesn't matter which one you use. I mean, we can go down to the bottom. This is all I mean, I'd say probably 80% of business owners say, tell me the bottom line. All they care about, did I make some money? Um, let's look at the parts. I mean, you really need to know more than that, okay? We start with, obviously, the income statement is for a time frame, all right? In this particular case, we're looking at last year, but as you can see, in any program you use, QuickBooks or anything, I can pick, this week. I can see what I did this week. I can see last week. I can see last month. So it's whatever time frame you want to look at. So that's kind of important to understand. It's time frame specific. So you always start by excuse me, I always start by making sure you know what time period you're looking at. All right. The components of it are pretty easy. I mean, we start with the name of the company, the time frame, and we have income. We start with total income. All right. And in this particular case, we're looking at a sample company, Rock Castle Construction. They have design income, labor income, material income, subcontractor income. So you have your parts of your income. And this, you can design this any way you want. It's a great way to kind of keep track of different parts of your business that you might have. This can be departments, this can be product lines. That's normal, what we normally have. Ours, has income tax, which then has a subcategory of corporate, individual partnerships, and then we have bookkeeping, QuickBooks, consulting, um, everything else that we do, and each one of them is a category. Excuse me, is a category. Below that, you usually have reimbursements. These are refunds and things like that that you might have given back to the customer. They usually go in here. This one here is income. It's other income. But you could, normally, if you have like discounts or something like that, they would go here, and you get to a number that's called total income. All right. From that, you now have the next section, which is your cost of goods sold, and these are the costs directly related to producing your product. All right. And in this particular case, construction company, so they have a general category: job materials, permits, licenses, subcontractors, whatever is goes directly into producing your product or service. And it comes up with a number that's called gross profit. Now, gross profit is nothing more than your total income minus your cost of goods sold. From there, you're going to subtract your operating expenses. And this is the normal stuff that you need to keep your doors open: your automobile expenses, bank service charges. Depreciation usually is under other expense, but it can go here. Insurance, and you can see how we have different types of insurance here: disability, liability, workers' comp. So you can have sub accounts if you want to. Your interest expense, professional fees, can't forget that pesky accountant, repairs, tools, utilities, and you come up with a number that's called total expenses right here. From that, you get net ordinary income. You add other income and expenses, which are basically stuff that comes up that's not job related. A lot of times depreciation ends up down here. Interest income, interest expense, and you finally come to net income. Now, you need to know the parts of it, but the key point to understand for any business owner is that one financial statement by itself really is of no use. So let's show you a couple of tricks that just, if you're not doing it, have your accountant or whoever does it do it for you. For one thing, you want to see percentage of income. So I can see here 66% of my income comes from subcontracted labor income. All right, 21% comes from material. I can see that cost of goods sold is 42%. My gross profit is 57. You know, insurance is 5%. That might be high, might be low, who knows? Which it leads to another problem. Another problem we have is that one year by itself doesn't mean anything, so feel free to customize it. One thing to look at is to kind of look at the previous year. And see, this is kind of neat. Let's just make all these a little bit smaller so we can see them. See, in this particular case, we're comparing this year. Remember, this is sample company, so it's using a prior, it's out in the future. So I'm comparing January 2015 to 2014, and I can see, whether I have an increase, decrease, the percentage increase. Now I'm starting to get some information that's handy. Cost of goods sold, what it was, kind of handy. I mean, I'm starting to see that it went up some. Sales went up by 243%. Cost of goods sold only went up by 2,000%. That might be a problem to look at. gross profit went up by 100%. So, I mean, we're all right. Automobile expenses were higher, but that's to be expected. We're doing a heck of a lot more. Depreciation is a non-cash expense. Insurance didn't have much anything last year. Had a big increase in sales, only a small increase in profits, which leads to what we were talking about as far as profit consulting. Another interesting one that you might want to do, you can also kind of take a look at, excuse me, to it by quarter. So I can do this fiscal year by quarter, and I can basically see what I'm doing by quarter if you look at it. See, let's just make this smaller. So I have, I can see, fourth quarter is pretty slow, though. If I remember right, this only goes through the 15th. But like the second quarter, what happened there? So, is this seasonal or do I have big jobs? So quarterly sometimes is a good way to look at it. Another thing that I tell that you might want to look at is by month. And that's particularly handy when you're looking at expenses like utilities or something like that. Make sure they're getting paid every month. So you can see here, you go across. See what I'm doing is I'm just going across. And, this is a way to see if a bill was missing or why a particular month is off. See, I can see equipment repairs. Sorry, bounced in the wrong place. Equipment repairs isn't every month. So I can look for a big job and see what's going on. So you can do a lot more research, but the key is to understand the basic income statement. So, if you don't, take a look at this, pull out the last one your CPA gave you. Try to see if you can figure out the key parts of it. Let me change this back to total, because this is what you should start with. Make sure you understand it, then pull out the last couple. Have your accountant or CPA put them on a spreadsheet if you don't have a QuickBooks or Peachtree or some other accounting program, and start analyzing them a little bit. See what's in there. You'd be amazed what you can learn and how you can actually increase your bottom line by figuring out what you're spending and where your income is and looking for trends. And that's kind of the key, looking for trends. Until next time, let's make this our best year ever. Thank you.